Welcome to the Weekend Edition. My name is Peter Resnick from ShadowTrader.net. The bear market is over is the title of this video because from a technical basis it is. Downtrends are now officially broken. NASDAQ 100 snapped it a little bit earlier, but the S&P did it today on Friday the 25th. We actually closed a bar above the downtrend line starting from the all-time highs. From a technical basis, the bear market is over. We'll see if that can hold. Obviously, this is a market that is seriously beholden to some headline risk, as we know, so things can change. I've got a basket of charts that I want to go over with you with some good ideas that I think you can make some money with next week. We're also going to dip into the market profile in today's show because I want to show you how some nuances are starting to stack up below us now, which is indicating that buyers are starting to take control. And then I've got a great number one draft pick for you as well. All right, so without further ado, let's get into it. On to the weekend review, which is where we always start the program, talking about the 11 sectors of the S&P and the major averages and the Bitcoin, gold, bonds, rates, etc., important things like that, seeing how they fared from Monday's open to Friday's close. As you can see, a lot of green on the board. Makes perfect sense. Obviously, markets are up, majors tacked on quite a bit. Volatility is still somewhat elevated, so you're seeing big percentage moves for the whole week, sometimes for the entire day. But really, here's where things get interesting in the fact that all 11 sectors, or 10 out of the 11, I should say, up really firmly. Tech, I always keep a very close eye on. The XLK had a fantastic week, super strong, up about almost 10% on the week. But the outlier here was staples. And that, I think, is a bullish sign because money kind of rotating out of staples is sort of anti-recessionary and going more into discretionary. You can see here, like discretionary up 8% while staples are actually down. Again, I think this just speaks to the bull case, kind of a little bit more of a lack of fear or lack of fear of recession, I should say, when money's coming out of staples and going to XLY. We saw the opposite for a while in this market. Everything else, all the other 11 of the 11 up, I should say. Bonds had a decent week, but I still don't think that's a chart you should mess with. Just feels like a whole lot of nothing to me. Volatility collapse. Gold, you're seeing here down almost a full percentage point, but that's really just because of where it closed on Friday. Remember, I'm measuring from the Monday open. Gold still had a very, very bullish week. There was a really, really strong action in gold. I'm still continuing to sell puts on every pullback and also buy gold futures on pullbacks for bounces. That's been working great this year. And now with gold coming in a little bit, maybe we get closer to that 3,200 level. That's going to be one of my charts to watch later in the show. So just keep that in mind. Oil about flat, and Bitcoin had a good week because, as we know, Bitcoin is pretty much a risk asset still. It'd be nice if someday it decouples and becomes more of a hedge or whatever, but I still feel like it just trades with the market. So you see Bitcoin had a good week as well. All right, so that is our weekend review. And now onto the charts to find out what's really going on. Okay, what's really going on? Charts of the majors, always S&P and NASDAQ 100. That's what we analyze in this particular part of the program. And we definitely have a lot to talk about because, again, the downtrend is broken. This is undeniable. Whether you believe or don't believe that the bear market is over, you may think there's more bad news coming down the pipe later. That may be the case. But again, as I was saying earlier, you must trade the charts that are right in front of you at this time. And what's right in front of us at this time is clearly a break of the downtrend. So the downtrend is over. You can see that right here. This is the all-time high here where the move down started. You connect to here, right here, you connect again, and look what happened here. Thursday we rallied right up to that downtrend line, and Friday we had some choppy action early today where we came back down in, and then we found our footing and we had a very, very strong close. So in the S&P cash, our downtrend line is over. I'm going to be focusing in the week to come on this congestion area here, which I think is interesting. I do think this is not going to be that easy to chop through. The fact that the downtrend is broken tells us that the path of least resistance is higher, but it may not be that clean of a move. So I would expect higher. So in this environment, if you want to just think ahead, at least the way that I would be thinking like butterfly, broken wing butterfly, unbalanced, as opposed to vertical or single, right? As opposed to buying stock, something that sort of targets an area and does well if it kind of chops around and goes there slowly. Just something to think about because you do have that congestion area there just to the left of us where we should be moving into next week. Now on the downside, I should say, before we get off the chart, if this was to fail, what you want to be looking for, obviously we would have to come back down below the line. But more importantly, you've got an 8 and a 21 right here. And the 8 is about to pinch through the 21. That's going to be a more bullish sign. I'm going to be watching for that next week. If you get the pinch where the 8 EMA closes above the 21 EMA, I call that the pinch because it goes up and it pinches up through like that, that's going to be a strong sign. But as far as failure is concerned, to sort of, you know, give you both sides of the coin, because obviously there's potential for anything to happen, we would have to close back down in here and also lose this 821, I think, and be here in order for me to change my tone. That's really the only thing I think that would really change the tone. So barring that, I do believe you want to have a more bullish stance in this market next week. Let's take a look at NDX. NASDAQ 100 has been more bullish over this week because it broke the line 2 days ago, right? If you notice here on the chart on Wednesday, you actually had a breach of the line on a gap up, but you didn't close it. You have to close above the line in order to actually have a downtrend line break. But that was only, that was Wednesday, but then Thursday and Friday, you got it, right? Thursday and Friday were very bullish in the NDX, and you clearly were way above the line. So same exact situation there. You want to be looking at this congestion area here. You're kind of almost there. You're just at the low end of it right here, or in that part, and you're probably going to move up into that area. So be aware. So overall case here is definitely more bullish than bearish. Again, trade the charts that are right in front of you, and downtrend line is broken. That in and of itself is sort of a self-fulfilling prophecy and should bring in more buyers. And if not, you know where those areas are that are going to change the tone. And as I was saying, look for that pinch. The pinch is important. When the pinch occurs, you usually get sustained movement in that direction once that 8 moves up through that 21. Charts to watch, lots of charts, stuff that I hope you can make some money with this week. I'm going to go through a number of them here. I'm going to start off with the Fangman plus T, my favorite list. This is mostly where I do options plays in these stocks, the Apple, Amazon, Tesla, etc. So I wanted to go through those first. And then I've got a basket of other stocks that I want to share with you as well. But let's just start with this Fang list. Apple looks like it's just now starting to maybe break the downtrend. It hasn't happened yet, but you can see here at this circled area where the downtrend has been established. We've been uptrending off the low here, and looks like we are about to break. So same thing as I was talking about the broad market. Look at your 8 here, look at your 21, and then look for the potential pinch to see if this gets a pinch and closes that 8 above the 21 and we kind of dribble higher. I would at least be targeting this 225 area in Apple. All right, let's move on. Amazon, they are going to report next week, so that kind of precludes me from doing anything, but they have definitely broken trend. It's a good idea to always look at all of these stocks because they really drive the XLK, they drive tech, they drive the NASDAQ 100, and I feel that they really are a bellwether more or less for the market. It's kind of really hard for the rest of the market to do whatever it's doing without these stocks, especially given the large concentration of technology in the S&P. Let's look at Google. They reported this week. This is what we call a gap and crap, when it just opens up and falls back down hard. Right off the bat, when I see that type of candle, like a large red candle with a high open and a low close, I just walk away. That's a no touch for me. I'm absolutely not interested. It is above the downtrend line, but to me, it's just very messy. I'm absolutely not interested. Meta is struggling a bit here, just managed to squeak over the downtrend line, but notice how much further the 8 and 21 have to go before they get a pinch. It's still a long way to go. So I think Meta is really just kind of stuck here, and I don't think there's anything going on there. Microsoft, this looks good to me because now they're going to report next week. This is important to note. So that also kind of precludes me from a weekly options play. But if they weren't reporting, I'd be telling you that this was a very classic, like multiple tests of resistance. You could look at it as like 1, 2. This is a third one. This is a fourth one here, and this is a fifth one. So at some point, it's got to break, and you probably see this whole number 400. That's probably where it's going. If this wasn't reporting, right off the bat, I would tell you, okay, this is like a reverse mullet, 390, 400, 402.50 or 405, whatever the strikes are. I apologize, I'm not familiar with exactly what the strikes are, but you get my point. That sort of butterfly with the top part scrunched in, we call that a reverse mullet as opposed to a broken wing. That's a trade that we effectuate in the weekly room all the time, works really well. That's what I'd be looking at. I'd be kind of targeting that 400. But again, because they are reporting, I would, there's no play for me. Netflix continues to look fantastic. I've been talking about this stock as of late. We had 2 winning trades this week in Netflix, and we're looking for more. We actually are already in more. We've already started selling some puts down here below the 8 and the 21. But I'd like to do something directional as well. I just think the stock is a little bit overextended off of this low. I call this coming up from the bottom. So this is really poor location for new longs. So you can see the coming up from the bottom means that it's been moving in a straight line from a bearish area where there was support. That's called coming up from the bottom, and it's generally not good location for new longs. Doesn't mean it can't continue to grind higher. It just means that you're putting yourself at risk of a liquidation break, that it could come in, and it could easily come in here to the prior high or to the 8 or to the 21 or somewhere in between. So just keep that in mind for Netflix. But I do think it's a buy on any of those pullbacks should they materialize. Okay, NVIDIA is looking a little better. You can see the main downtrend is all the way here. So really the stock has been showing a lot of relative weakness. Right, the NASDAQ 100 broke the actual downtrend from all the way over there, right from the highs up here. And NVIDIA, you can see, is still pretty far behind. So that is the situation there. And last but not least is Tesla in the Fangman Plus T, but I'm going to hold off on that one because that is my #1 draft pick for this week. So kind of a advance heads up for something going on. And later in the video, I'm going to hold off on Tesla because I want to go over it in more detail. All right, let me show you some other charts here that I have marked up for you. All right, Avgo, this is Broadcom. And look at the downtrend here, here, here. I love this like congestion area here, because if you get above it, and that would also tie right in with a break of the downtrend line, if you get above that congestion, you're putting that congestion in the rear view mirror, and that usually is a recipe for like boom, for higher, basically, once that happens. So on the break of the downtrend there, probably an easy chip shot play, I would say, to be looking for some sort of a move to the 200, especially the 200 level is a prior high, a prior low, and the big round number. So there's this sort of confluence of things going on technically right at that 200. That's another idea where I would do like a reverse mullet or some sort of a classic play, just kind of targeting that area. I'm also a believer that once we get so close to the downtrend line rather, and you have this congestion area here in the rearview mirror, these pullbacks are usually buyable. So if anything, you'll get like a dribble down to this area, and then you'll retest the line, and then you'll get a bit higher. Okay, so that is Avgo. Let's move on. Let me just clear these drawings. CMG is my next one, which is Chipotle. This looks good to me because, and you can see the earnings are already behind us, because of the multiple tests here and the expansion of range on good volume on Friday. But you can see there's this low area here, and then the stock had kind of like some difficulty moving below, and then it retested, and makes perfect sense that it rejected here because this was the prior low area. Then a lower low was made, then a higher low, and now this sort of explosion to the upside. And what I like a lot about this is just the fact that these highs are matching here, and that I think pushes the stock a bit higher. And of course, this is way through the downtrend at this point. No matter how you draw it, you can start from here and cut down like that pretty much, and that's also important. That's, I think, why the stock was so strong, you know, over the last couple of sessions. Thursday it kind of had like an exploratory session, kind of moving up, fell back down, and then Friday just kind of exploded to the upside again to that prior high where I think there's some sort of a breakout going to occur. All right, next one is Palantir, ticker Papa Lima Tango Romeo. This is like the new NVIDIA. You know, this is like the one that, this is like what I think everybody thinks NVIDIA should be doing, but this stock is doing it. So it's AI, obviously, and it's just moving up really strongly. I think any pullback is viable. You've already got the pinch, so it's definitely ahead of the market in that sense. Look at where the pinch occurred back here on the 821. These are some VWAPs that I just drew in just like from this area. I'll probably have to change them now, and I'll put on like, you know, VWAPs from the lows, which would be a good thing to do just to see like where the pullback could occur. So if I put a VWAP here, that's interesting that it comes right here to where the 821 is. So this is just a classic type of pattern where you've got a prior high here of support. Any pullbacks in here are buyable. So on any weakness, I would be a put seller and also potentially be looking to buy with the ultimate target here to the 125 area on Palantir. Okay, let's move on to Target is the next one. retailer, kind of beleaguered, and just really down in the dumps. But that usually leads to a more explosive move to the upside because this is a lot of congestion here. There's a lot of pent-up pressure here, and I think there's a lot of shorts stuck in here. And when that sort of action occurs right underneath the downtrend line, and you can see it here, that is usually a recipe to kind of explode higher out of that area. And I do believe it's going to be probably drawn into this area because that's that prior congestion area. Remember that what prices do is essentially just move from excess to balance and back to balance. So they find a balance area where prices are fair, where the greatest amount of shares can be distributed out to the public. That's an efficient market. And then they break out of that area, either to the upside or to the downside, and they find a new area of fair price where they can balance. And that's what you're seeing here in Target. There was that fair price of balance around 108. Then a new balance area was established on a gap down between, say, 96 and 93, and now you're back up here at about 96, 97, looking like you want to break that downtrend line. So potentially moving to that next area of balance a little bit higher. Let's look at gold. That's my last one that I want to share with you. Super duper strong, and I just want to reiterate the technicals here on what is to be done next week. So this is really just shaping up to be the trade of the year. There's just so much money to be made in these short puts on the futures. I keep talking about that, and obviously we're doing that trade live in my weekly options room. You can check the address right there in the Chiron, shadowtrader.net/options if you want to join me. And this has just been making a lot of solid money for us all year, and we're going to keep doing it because the thesis is that gold is bullish. The thesis is that gold will not have a collapse. It will stay strong in the face of all of this uncertainty, and it's also a hedge against $34 trillion of debt. I mean, I don't know how else to say it, but it's a hedge on all that. The Chinese are buying strong. There's just so much bullish underpinning here, and there's no reason not to continually rinse, repeat, and exploit it if you can. But as far as the technicals are concerned, I continue to keep my focus on this 3,200 because it is the prior breakout point. And it's also, you can see here the VWAP from this pullback, the anchored VWAP brings you into here. And so far you haven't even taken out the anchored VWAP. This is your 21. Your 8 is right here. You're kind of just hanging out at it. But again, this prior breakout level here at the 3,200, this is a buy to me. I already have limit orders sitting here at 3,205 for a starter position for a few contracts. And I would definitely buy more anywhere in here, right? And I know this is a relatively large range, but it's going to be a while before the uptrend line continues, before we get there, and we'd have to have an all-out collapse. But I do think if we get down just to that prior high, that's going to be a bounce point. And any weakness really is just an opportunity to sell puts, but always do it very, very technically. Like for instance, expiring today, we had 3150s, I believe. And then we also did like 3135s. And you can really only do this on a down day. And it just works really, really well. You're looking at these are options on the futures, and you're probably getting anywhere from 70 cents to $1 per contract for a 24-hour period, which is really, really good. Remember, these expire daily, and they expire at 1:30 in the afternoon every single day, which is also, to me, makes it kind of attractive because it's certainly a lot further ahead in time than 4 p.m. Eastern. But that's what I'm going to be looking at there. We are short the 3135s right now in the weekly room, and again, I'm looking for a pullback to this area at the 3,200 for a potential long. All right, so there's the charts to watch for this week. A huge basket of ideas. I hope that it's helpful to you, and maybe you can take some of these and make some money with them next week. Time now for a little market profile, one of my favorite subjects, and we haven't had a market profile segment in some time, so I'm excited to discuss market profile with you once again. Lots of nuance here, both above and below, and again, it all kind of points to bullish. Remember, one of the functions of the market profile is to confirm or deny market action by showing you nuances that are not available to you in traditional candlestick charts, and that's really, really important. So right off the bat, first thing to consider is that there is an unfilled gap here in the ES above us, and what's important to note And again, how this kind of differs a little bit from candlestick charts is that most ES is charted on a 24-hour basis. So whatever candle you see has the overnight session and the day session rolled into one. But when you chart with market profile, you always separate those sessions. And that's really, really valuable to do. So you can see here on the chart, for instance, that this is overnight activity, and this part here with the yellow value, this is what we call RTH activity. That stands for regular trading hours. So gaps are only gaps when they are gaps between highs and lows of regular trading hour sessions. And so we've got an unfilled gap in the ES above us here, starting from this session back here in early April. So this area here is an unfilled gap. And I say that that's kind of bullish because remember, prices tend to move relatively easily through gaps. We call them like a window or a void, and there's just no value there really. So it's easier for prices to chop through. So that's something to keep in mind. Now underneath us, we're starting to stack a little bit of nuance below us. Like for instance, like Thursday's trade ended on a spike, which put the spike rules into play on Friday. And then Friday opened here, like below the spike, which kind of negated the spike action. But then it did plenty of acceptance inside of the spike, as you can see here, confirming those higher prices from late Thursday, and then closed much stronger than that with not only a settlement at the high end of the range, but a couple of other things that, again, market profile nuance that you would never see on the chart, confirming this bullish action. Look at where the POC was and where the value area was. The POC, which is the point of control, we call that the fairest price to do business. That's where the most volume at any particular price level traded, was very high in the session. We call that POC migration, and it's a good thing. If you're bullish, you want that POC to be migrating higher with price and closing high, telling you that traders are committing to contracts at higher price levels. So that's one thing. And then also what that usually does is causes the value area to expand to the upside. And notice that the value area high and the settlement are one. Usually in a normal RTH distribution, you will not have the value area all the way at the top of the range. The value area, which is roughly 70% of the volume traded that day, will be somewhere in the middle, and you'll have some excess on the top and some excess on the bottom. So when I see that value area extending up to the top of the range, again, it tells me that people are committing volume at very high prices up in the range, and that tends to be certainly more bullish than bearish. Okay, if we look below us, more nuance as well. There was a gap here that doesn't really exist anymore. We can get rid of that, but we can get rid of this. That's the base of the spike we already talked about. But look below us now, like we're starting to stack VPOCs. We've got two virgin points of control below us. And also in the 424 session, which was Thursday, there was a long string of single prints here. There was some emotion here. And that's something that is like a poor structure that needs to be repaired. And if it doesn't, you want to carry it forward as bullish. The fact that prices on Friday, and I talked about this in my pre-market perspective video, which I come out with every single morning. It's part of a larger report that I put out to all of my subscribers. You can get it on our site super inexpensively. It's like $1 a day, 20 bucks a month. But people who are in the weekly options room or the live trading suite get the pre-market perspective for free included in their subscription. And one of the things that I talked about on Friday morning was a simple fact that if the market was to stay bullish on Friday, I didn't want to see this single print section tested. And lo and behold, it didn't get tested, right? We did have some wild action on Friday where it was kind of two-sided and we came down to here, but those single prints remained untested, and I'm carrying that forward in my narrative as bullish, all right? So that's kind of nuance one. Below us. And then beyond that, as I was saying earlier, you're starting to get virgin points of control below you. That means that where there's a fairest price to do business, a high volume node, if you will, that doesn't get tested in a subsequent session, we call that a VPOC. That stands for virgin point of control. And you've got one there from 423. And if we go back down into here, and by the way, I should say before we get to the gap, you've also have an unfilled gap now below us, which is actually a bullish thing, right? You have an unfilled gap here. Again, you can put that in the same column as the structure of like the single prints, etc., where unfilled gaps are bullish. Why? Because it's essentially the market not doing something that it should, right? We call that WWSHD. That's a term that I coined a while back, which stands for when what should happen doesn't, you want to go in the other direction. And what should happen here is a filling of the gap doesn't, the market is probably going in the other direction. And that's what we clearly saw this week. So you got an unfilled gap as well, VPOC above it. And then, as I was saying, other virgin point of control down in here. Let me see if this is actually another one that I didn't list. This is actually another one here. That's virgin point of control there at 53.14. That hasn't been tested. And I believe, if I've got it right, there's another one here, right? This is also here, and I've got to refresh this data to make it just right. But there's another VPOC there. So you're stacking now 3 VPOCs actually below us. And again, that's bullish. When the virgin points of control start to stack below you, it tells you that the market is not tagging up. It's not going back and tagging up. It's just running forward. Normal markets will sort of expand and contract, from excess, balance to excess, etc., balance out to excess, back to balance like that. When that balance doesn't get retested, meaning you're not going back to the fairest price to do business, you can think of that as short-term bullish. So just a few nuances there on the profile that really just, as I said, are just driving the point home in a more nuanced fashion, in a way that you may not see if you're just looking at traditional charts. Kind of pointing to some more bullish action. Just as an advance heads up, I am right now just finishing up the outline for something that I'm going to call the Market Profile course, and I'm really excited about this. There's been a lot of people asking me to do this for a long time, and the hardest part of putting this together for everybody is really the planning stage, which is what I'm in right now, is just making sure that I've got every single thing that I know about market profile listed so that I can then record it. The recording is not that difficult to do, but just to give you an advance heads up, it's going to kind of be broken down into 3 sections. There's going to be basics to kind of explain what the market profile is, how it's constructed, why it exists, and how it can help us, and all the different components of the profile. Then it's going to move into market profile theory, where we start putting the little patterns together, saying, what's a poor high, poor low, single prints, how does that work, POC migration, value area, etc. That's the theory. And then I'm going to wrap it up with some actual examples, which I call application, where I will take a number of trading days and show you examples of how the profile did this and price action did that. Notice that we were looking for price to do this, the profile was here, etc. How the different nuances play out on actual trading days. So I'm pretty excited about that. That should be coming at you probably within a month or so at the most. So look for that on our website. It's going to be called the Market Profile course. So I'm excited for that. All right, so that is about it really on the profile. Again, I do write a report on this every single morning, that pre-market perspective and that video that I talked about earlier in the show. That is all through the lens of market profile. It's really a morning market profile letter. I give you all of the value areas and pivots for ES and NQ. I lay out some scenarios of how I think the day is going to go, key levels, etc. There's also a video, as I said before, about 3 to 5 minutes every single morning, showing you basically where I think the market is technically and how I think the day is going to play out using some of this market profile nuance in front of us, right? And again, that's right at the Chiron down below, shadowtrader.net/PPP. And if you are a member of any of our trading rooms, be it the Live Trading Suite or my room, Weekly Options Room, remember that you always get the PPP for free. Okay, time now for our number 1 draft pick. This is where I give you my top idea for next week. And this week's idea, as I alluded to earlier in the program, is Tesla. Starting with a little bit of fundamentals, with the caveat that this really means nothing to me. It's all about the price action of how it's driving. But something jumped out at me at this particular report here, or I should say on this particular report of news. This is a research report here, Benchmark Equity. When they reported earlier this week, they definitely missed on revenues, obviously. And gross margins came in a little bit higher, blah, blah, blah. None of that really matters. But what is important is this stuff, is that the robotaxi business may be launching in June. Probably isn't. You know how it is. They always promise and under-deliver. But this is also interesting to me. It has the least exposure to tariffs. 85% of its vehicles compliant with the United States, Mexico, Canada agreement. So that's kind of interesting. And notice that they put a 350 price target on it here, which I'm about to show you why that's interesting to me when I look at the chart. So here's where the rubber meets the road and what's really, really important. I actually posted this chart on X earlier today. If you want to follow me there, it's right there in the Chiron. That's my handle on X. And what I like about this chart is a lot of different things. First of all, the fact that earnings are in the rearview mirror, that's always helpful to me. Friday had a huge explosion to the upside on a big increase in volume, which is good. There is a huge congestion area here that needs to be cleared. And whenever you have a congestion area like a balance like that, the general rule of thumb is that how far it can go is double the balance. And remember that that research report put a $350 price target on it. And interestingly enough, if you double this balance area, you get to about 360. So it's kind of funny how they put that right there. I don't think they're using that, but I just find it interesting that there's that sort of confluence between the technical and the fundamental for what it's worth. So if we can break out of this balance area, another reason why I think there's potential to move to here is the fact that if you look to the left of the chart, what have you got? You don't have congestion, but rather you've got open space. This is a straight move down where the stock was just tanking after breaking down lower from about that 330 level. Those areas in the chart where there is no congestion and there's just straight price action down or straight price action up, those tend to be less supportive or resistant as price moves back down through them. So that's what I'm liking as well, is that if we're going to break out above this 285 area, the price that we need to move through looks like this rather than like something like this or something like this. It's just going to be a lot easier. So that's really my thesis on Tesla. We are already long in the weekly options room. I'm long some shares on top of that, and I would probably buy more on a pullback. It's the same thing I was talking about as well with the whole 821 pinch. Notice that we pinched to the downside right here, and that set up the down move in Tesla. And here we failed to pinch to the upside. We tried to, but we stayed here in the consolidation zone. We didn't actually get enough high prices that would effectuate the pinch, and now we're getting the pinch. Now you've actually got that 8 pinching through the 21. So I think that also, once I see that, I tend to think that, put sales are okay, that you've got some security here where these lower levels are secure. We're already short some puts here in the room at the 220. I think, to be honest with you, we would sell more of those on a pullback. Any pullback in this area here, as long as it holds that 821, which is about the midpoint of that congestion area, I'd probably be short more puts. And again, looking for this move here up above this shelf here, moving a little bit higher towards that $350 area in Tesla. Let's look ahead to next week so we can see what economic data and earnings are going to be happening. And it is a heavy week. And I just want to mention right here that if there's anything that could have the potential to derail this bullish action, it could be some of this, because you have some important earnings coming out, and more importantly, some important tech earnings, as you can see here on the chart, some of which could really have a lot of effect on the futures. So just keep that in mind as we go forward. But Monday is going to be Transocean, which is RIG is the ticker in the oil and gas space. Tuesday, you've got a consumer confidence number. That's always a important market mover. And then the earnings are hot and heavy. You got BP, British Petroleum, Starbucks, Coca-Cola, Booking, Visa, Spotify, and PayPal. On Wednesday, we're going to get a GDP number and also PCE. Those are very, very important, telling us about the state of the economy, whether or not it's growing or contracting, and also some inflation numbers. And beyond that, we'll see reports from Caterpillar, Microsoft, very, very important, obviously a big, big one in tech, eBay, and Robinhood in the brokerage space. Thursday will be the usual initial claims. That's always on Thursday. We're also going to get an ISM number that week. That's also a potential market mover. And then again, heavy on the tech earnings. This is sort of that big week where a lot of the Fangman plus T reports. It's going to be Amazon and Apple on Thursday, and those are really, really important. Apple obviously is the largest component in the entire S&P, I believe, and obviously a market mover, so keep that in mind. Also Harley-Davidson, Lilly in the drug space, MasterCard, and Atlassian, ticker TEAM, is also reporting on the tech side. And then Friday, we continue with important economic data. We're going to get non-farm payrolls, and more importantly, the unemployment rate. And remember, this is the thing that I started talking about many, many months ago, talking about looking for a move up away from that 4.1, 4.2 area, which would maybe potentially signal that we're headed towards recession, because it is a very reliable indicator historically, pre-recessions, when you get an uptick in unemployment. So far, that has not happened at all, but watch that number very closely on Friday, again, to see if we move a little bit away from the status quo of somewhere around 4%. And that's all for this week. Thank you so much for spending a little bit of your weekend with me. So just to recap some of what we discussed in the program, from a technical analysis basis, the downtrend lines are broken from the all-time highs, both in the S&P and in the NASDAQ 100. We potentially are going to get what we call the pinch of the 8 EMA moving up through the 21. That would be a stronger signal if it was to occur. And of course, that also tells you where the market potentially fails, right? Is that if we get price action next week that takes us back down and we lose that 821 and we come kind of back down into that range, then maybe it's all bets are off to the upside. Obviously, this is a market that is still very much in the throes of headline risk. All right, beyond that, I definitely gave you some good ideas that I think that you can run with. A little bit of action on the market profile, which I feel is confirming what's going on bullishly, and we'll see if next week it's going to be a situation of April showers bring May flowers, right? Because we'll end the month in the middle of the week and move into May, and we'll see if May will be a little bit more bullish, right? New studio still coming at you. I'm still excited for that. Fingers crossed. I'm pretty sure it's going to happen in the month of May. So hopefully these little screen sharing things will be a thing of the past. But I do so much appreciate all of you loyal viewers still tuning in, even though I'm not in the full studio. But again, I am super excited to bring the new version of this weekend edition show to you very soon, hopefully in the month of May. All right. That's all for now. Be safe out there. As always, I wish you good trading and good night.